Good morning, everybody, and welcome back to the Wilton Report, Princeton's only dedicated podcast and videocast. If you're a YouTuber, we are going to get started today. The market remains as frenetic as ever, and I got to tell you, it's intense. It's an intense market for everybody. So here we go. Let's get started with, I think, the 37th episode of the Wilton Report since we've started the podcast. So the first things first, we do offer other companies, their services for your landlords that do listen to the Wilton Report, and I know you do because I do get texts and emails about it. We offer Princeton Property Management Services, and you can check us out at princetonpropertymanagementservices.com. Very local, very high tech, very high touch property management company here in Princeton. Princeton Home Connections, this is coming soon. This is going to be an ADU development company that we're about to launch. So if you own a home in Princeton and if you want to know if you can build an ADU, go to princetonhomeconnections.com, check out the site, and just click the contact button. We will help you figure out if you can build an ADU on your property. And that is going to be a big deal. We'll talk about that a little bit today. For you realtors who are listening, and we do have a number of realtor listeners, we have a referral company. So if you're not looking to sell real estate full-time anymore and want to put your license in holding pattern but still earn money, we have a great referral platform for you to check out at Queenston Referral Associates, same URL. And just a couple of saved dates for our listeners/viewers. So the first one is October the 4th. My partners here at the real estate company, Vanessa Shives, 𝐂𝐎𝐍𝐍𝐄𝐂𝐓, and I will be tending bar at Princeton's famous/infamous Ivy Inn, and we'll be raising money for charity. The first charity we will be raising money for is the Rescue Mission of Trenton, and the second one is the Housing Initiatives of Princeton. So it's October 4th, 6 o'clock at the Ivy Inn. And we invite you, bring sundries, bring toothpaste, bring, soap, new washcloths, new towels. Men's and women's underwear are a huge need at the shelter. And we encourage you to bring cash because the tips go to the charities. It will be a fun event. I think a fair number of people are looking to attend it. So it'll be fun, and look forward to seeing you there. The next one is November the 4th at 10:15 a.m. It is a Saturday. We'll be talking about the market in excruciating detail, fun detail. What's going on in the market, how to buy, how to sell, investment strategies, and we'll kind of cover rates, et cetera, et cetera. So it'll be like a Wilton report, but like in a really, really high level of detail. We'll cover probably 5 or 6 local towns. In high level of detail, we'll break out a couple of neighborhoods, and we'll just put together a really, really good blueprint on how to buy, how to sell, how to look at investments, et cetera. And the last one is in December. And I realize the dates are not concurrent with this slide because we changed it. In December, we're going to be doing 2 1031 exchange seminars. So I will post the dates on Twitter. You can follow me at Twitter at Joshua Wilton71 or Instagram Josh Wilton71. So we'll be doing 2 1031 exchange seminars in December. So the other thing too, just as a reminder, and I'm very proud of this, and I do thank a couple of friends of mine for encouraging me to go down this path. We do donate for every closing to the Rescue Mission of Trenton, personally for myself and my team. And I can tell you last month, well, really this month, September, we've raised over $2,000 already. I think in excess of $2,300 for the Rescue Mission of Trenton. So pretty big deal. And, my brother, Phil, he did pass from addiction, and the Rescue Mission deals with addiction and homelessness. So just a near and dear charity to me personally. So just so you know, this is part of our mission here at Queenston Realty, at least mine and my team, the Wilton Group. So that being that, we're going to go sort of like, what the heck is going on? And it is like really crazy out there. So just as a quick synopsis, a house came on in Princeton, $2.5 million. My customers immediately offered over asking price, $2.5 million, mind you, over asking price, waived every contingency, huge down payment. And the response was the seller didn't want to take it off the market because they had a mortgage. Finally went contingent with my customer, and this was Friday night, Saturday morning of last weekend. By Sunday night, 2 other offers had come in, and I could only assume one of them was cash because we were knocked loose. So probably, I will tell you, it was a tough week for buyers in Princeton because The market accelerated again. We'll go into why. And inventory decreased again, and we'll go into why. So today, we're just going to draw on some national headlines, and we're going to parallel it to what's happening locally in the market, because a lot of times customers walk in the door with an opinion as to what's happening, and it doesn't really translate to what's happening locally. And as you know, the market does not care about your opinion. The market's the market. So the first things first, if you don't follow Jessica Louts on LinkedIn, you should. She's excellent. This is an article from Washington Post. That was yesterday. Homeowners are not budging from low-rate mortgages and new housing starts are down. Something has to give to bring new inventory to the market. Conversion of empty buildings, accessory dwelling units, which is why we're starting that company. Buyers face a market with slim inventory, and if they find a spot, this is nationally, the typical seller will receive 3 offers, 1/3 of the homes above the asking price. Princeton, I'd say it's 100% of the homes above the asking price. Not 100%, but as statistically close to that as possible. And that was from a Washington Post. Housing market tightens again as inventory hits historic lows. That is a national phenomenon. This is not a Princeton phenomenon. It is exacerbated in Princeton, and I will show you what I mean by that. This is a post I put on Twitter, and you can feel free to follow me at Twitter. I do post the number of available homes every day. And of course, I think I'm funny, so you will too. We were down to 43 homes yesterday. 43. I've never in 20 years seen it that low. It started the day at 47, ended the day at 43. Quite scary. So right now, we have 45 active and 3 coming soon. So this is what it looks like. So if you're listening to this on Spotify, you might want to go to this slide on YouTube just to kind of check it out. So of the 45 active, 1 is affordable housing for sale at $77,000. Most people can't buy it because their income's too high. So that brings it down to 44. Several others have offers. Several others are lots where the houses are flooded and uninhabitable. So you really have 38 to 39 net active homes for sale in Princeton. That's it. So that national phenomenon of people not selling, right, has been going on here for a while. The other phenomenon, too, is that we're built out. There's no new home subdivisions being built. There's no Edel Farms. There's no Riverside, so it's all spot lot. So again, if you're for development, against development, whatever, you should be for the ADU phenomenon that will be happening in Princeton, because people are not going to be able to live here. And it's tough. And this is what's happening. So it's a quick snapshot. And if you look, there's really only about 10 houses in Princeton below $1 million. 2 are lots and not habitable. 1 is affordable housing. Most people can't buy it. So it's tough. There's very little for sale in Princeton right now. There's actually more active and under contract in Princeton than there is for sale for the first time, I think, ever. So this is another thing we hear because consumers read the news, which they should, stay informed. But Josh, rates are high. That means the market's slowing down. No, it doesn't. It used to mean that. It doesn't mean that in 2023. So again, talk to your realtor, sit with myself, sit with my team, because this is what's happening nationally. And again, this is Jessica Louts, who I think is awesome. Very, very good data, very to the point. 27% of the national market, that includes like Mississippi and Oklahoma and, Arkansas, and which again has, Walmart in it. So whatever. 27% of the national market, the buyers paid cash for their home year to date. 27%. That several years ago, that was the Princeton norm several years ago. This year, and this is a snapshot from Bright MLS, right? So this is our local MLS that represents the home sales in Princeton. There were more cash transactions, 124, than there were conventional loans in Princeton. Just let that sink in. More people paid cash for their home than they did taking a conventional loan, which is the normal source of financing. 49.7% of the Princeton market is cash. So half the market is cash. So what does that mean? It means you have to be on the top of your game as a buyer in order to be competitive. Full stop. And by the way, I'd say this is just about the same in West Windsor. There's actually fewer homes for sale in West Windsor. There's like nothing for sale. Most of the surrounding towns around us have this phenomenon with cash. Princeton happens to have the highest, right? And don't forget, another segment of the buyers are Princeton University buyers. So they're getting the tenant in common loan from the university. So they're getting a 33% equity position from the university, plus a 40-year payment schedule, plus rates 2 points below the market because the university lends its faculty its own money. So again, if you're buying, you're competing against people, right, that have cash, that are getting really, really good loan products. So you have to be a very savvy buyer in Princeton. Do not go into this cold. You need to have a killer consultation with your realtor or myself and my team, obviously, because we're the best. So the other thing too is this. Real estate is not driven by interest rates. It's part of the picture. But real estate is just a reflection of your life. I've said this a million times, and you can tell I'm getting all worked up and frothy about it, right? Real estate ultimately is about jobs and consumer confidence. And right now, U.S. applications for jobless benefits fall to the lowest level in nearly 8 months. So the Fed has been raising rates all year. We all know that. Rates are high, and they're in the 7s, which, by the way, for me, when I started, rates were like 11.5. So 7 is not that high. But jobless benefits fall. And what does that mean? That means jobless claim applications are seen as representative of the number of layoffs in a given week. So what does that mean? Layoffs are down. That means a lot of people are working. The other data to look at is U.S. businesses have added 236,000 jobs per month this year, and job openings dropped to 8.8 million in July. So you're going to say, well, that's bad news, Josh. And I'm here to tell you, it has never topped 8 million before 2021. So again, people hear the news and they want the news to fit what they need it to fit. It is what it is. So let's look locally. The number one job markets in the East Coast, Mercer County, New Jersey, plus 13,000 jobs. Middlesex County, New Jersey, plus 36,000 jobs. Newark Metro, 19,500. So these are all markets that affect Princeton. So the reality is not only, right, are we built out, we have low inventory, we have massive job growth in Princeton, in Mercer County, in Middlesex County. So you couple these things up with low inventory, well, guess what? Prices are continuing to go up. It's continuing to see bidding wars. It's continuing to be challenging for buyers. So that's the question of, okay, what's going to happen for the fourth quarter of 2023 and 2024? So if you really want to get nitty gritty with me on this one, come to the market seminar in November. We will really put a lot of time and care and effort into the forecast for 2024. Here's my opinion. Not that anybody cares about it, but since you're listening, you're going to get it. Fed's paused interest rates hike again, but ups long-term forecast. So I've been saying all along, I personally, based on the local market conditions, because that's all I can really go on, but I do follow the national real estate news. In real estate, it's a big part of the core inflation index. So based on that, I don't see rates really coming down in 2024. I could be wrong. Part of me hopes I'm wrong, but I can't control it, so I deal with what I have. But if you ask me, I see rates staying elevated. Job growth is good. Employment is high. Unemployment is at historical lows. It's at 3.1% or 3.8%, excuse me. So I don't see a massive change in interest rates in 2023. I don't really see it in 2024. I do see it towards the end of 2024, maybe going to 2025. But I think we're in this cycle for a while. So if you're going to wait out the market, great. Prices are going up. It is what it is. If your intention is to wait and rent, that's fine. Your rent's going up. It is an inflationary environment for both retail and rental prices, which is why I don't see rates coming down. And the Fed has talked about, will they raise rates? Will they not? I do think they're going to raise rates again before the end of the year. That has been built in already to the mortgage market. But, that's my opinion as to what's going to happen. So buyers, my quick message to you today is you need to sit with your realtor, right? You have to sit down and spend time learning about the market. And I don't care if you're listening to this in Washington, D.C. Do not go into this market cold. It moves too fast. Not that it's too challenging. It's just fast. And if you're not informed, it's going to go right past you. So sit down, have a very thorough buyer consultation, ask a lot of questions, learn about the market. Once you find the house you want, move extremely fast. Don't think. Have your ducks in a row prior to finding the house that you want, because there are other people looking at it and they want it too. Waive contingencies. Mortgage contingency, if you have cash, waive it. Appraisal contingency, if you have extra cash, waive it. If you have cash, put as much down as possible to secure the house to lower the appraisal contingency. Inspection contingencies, you're going to waive most of them, right? Radon, I would waive it. If you want my opinion as to how I would buy a house in this environment, radon is a $2,000 to $6,000 fix. It is not a big deal anymore. We work with very good remediators. They never miss, at least so far, knock on wood, right? I would limit it to structure. I would limit it to a sewer line sweep and an oil tank sweep and the roof. That's it. And by the way, not that the roof is old, just that it's not leaking. That's pretty much what I would limit my inspection to. Just to make sure that, like, that's it. Those 4 things. Beyond that, you're putting yourself in a position of probably not getting the house. And just remember, buyers, the market doesn't care about your opinion. If you find a house that you have to renovate after you move in and you want to pay less, the market doesn't care. If you're a builder and you think you're important because you have cash, just remember, the market doesn't care. The market doesn't care. It's a numbers-driven market, which is why I'm going to say go back with sitting with your realtor for at least an hour, reviewing the numbers. It's all about the numbers. Sellers, for God's sakes, my advice to you is just put your house on the market. Just, it's your patriotic duty to sell your home right now. So obviously, you still want to stage it right. You still want to price it right. You don't want to overprice it or not stage it. But sellers, it is a rather historic time to be a seller because there's so few of you. And that's one of the good things about this environment. If this is a thing you're thinking about selling, this is the time. So if you want information on selling your asset, investment property, your home, obviously reach out. And last but not least, I'm just going to remind you about October the 4th. We are having a fun event. I would love to see you all. If you do listen to the podcast/videocast and we don't know each other, I'd love to shake your hand and raise some money for charities. And again, just remember to bring some sundries. That is it for this edition of the Wilton Report. Thank you, as always, for tuning in, and I'll see you guys on the next episode. Thanks, everybody.